Good evening, all. Ira Epstein of Linn & Associates with your market wrap-up for your metals. And this is for Monday, the 29th of November, 2021, just after 6 p.m. Central Time. Getting a little bit of a bounce again in the gold. Gold seems to be having a pattern where it rallies in the evening, falls back during the day. Keeps going back into this area of the 1790 zone, fighting a battle there, and we'll see what it can do. In the copper market, I'll be watching that because London stocks, the LME stocks, are again at lows that we haven't seen since last March. Now, when that happened then, if you take a look at your charts, you see that the market put itself into a position where there was actually a squeeze play on. I'm not saying that'll happen now, but you're getting low stocks. That's very important. In the bonds and notes, sort of drifting right here. Tomorrow we're going to see before the Senate Banking Committee both Fed Chair Powell and Treasury Secretary Yellen speak. Already prepared text has come out from Mr. Powell, and he's very concerned about COVID. To me, it sounded very dovish. I mean, I can't imagine that the central bank is going to go into the December FOMC meeting, which is just weeks away now, and start saying, well, we're going to taper more as we don't know enough about the Omicron variant. Now, if that variant turns out to be a no deal and that news comes out before the Fed meeting, well, maybe that could happen, but why would you do it in front? And even then, you know, the Fed doesn't like to backtrack. It likes to set its foot and one foot go forward, not having to say, oh, we have to revise because this happened. They have given us ample warning that COVID is a big problem for the market. We'll see what that is. The Fed chair in his prepared testimony also said that he thinks that prices will persistently stay high into the first part of 2022. Well, that's not hard. That's all of 4 weeks away. And then he looks for them to gradually start easing, as do the central bankers in Europe. That has yet to be proven if that'll be the case. There's plenty of people that think between rent, wages, and other prices that know that's not the case. And yet, if you look at the seaport news, and I write about that in tonight's newsletter for my subscribers, I point out how the seaports, we're getting less container buildup there, how they're moving out, the days in storage that are sitting. Very, very big difference. Now, when you look at gold on a weekly chart of closes, you've come back to that important 1790 area on a weekly basis. This is the battleground. You're under it right now by $3.50 as we're sitting here, but you can see it. It's pretty clear what it's doing. When you look at a daily bar chart, in order to get anything good going, you got to clear this high that you made. This was the day of, obviously, Friday, when the market rallied as high as 1819 and then gave that all up by day's end. And as you can see, it's just come back there and sat where it had been for the days prior on a closing basis. The trend is down. You have a pattern of lower highs, lower lows. And again, that 1819.30 is an important number. If you take that out, that is the number that would break the back of this downtrend that you've had. The resistance starts at now the 100 and the 200-day averages. They're 1796.70 for the 100, 1797.10. That's the green and the gray. If they clear that, 1829.30 next resistance. But the important part is there's resistance over the market, so where's the support? It's all the way back here at 1762.30, the lower Bollinger Band. So if the market breaks down from these levels, that's the open target that I see. The market is oversold. It is not even trying to embed where the blue and the red lines go sideways under 20 to lock in the trend. So you have an oversold market that is pushed itself down rather hard from these highs of near 1900. We'll see where it wants to carry things. The gold-silver ratio still looks a bit weak to me, as you can see, in terms of silver not gaining on gold. The higher this number goes, means the more ounces of silver you need to get 1 ounce of gold. So silver's not looking good, but silver, like gold, coming down in a downtrend. Now it keeps hitting its lower Bollinger Band and looking for support in that area. It, too, is in oversold territory. The way that I teach in my enhanced Bollinger Band course, when you get down to a Bollinger Band and you're not embedded, I think the pros are taking money off the table there. All the money. In the copper market, you can see you're stuck. I pointed this out just last week, and I'm going to point it again. You're stuck between the upper and lower Bollinger Bands. You're going sideways. You're not in a trend. You have a lower and low, higher high. In the platinum market, you're still very much in a downtrend. Will this market embed? Now, let me show you. You can't count tonight's data. So you got to go back to Monday. Both numbers were certainly under 20, but they weren't there on Friday. So you're just in an oversold market. The question is, does it find its legs here? And if it does rally, you realize it's got resistance at 1019.60 up to 1034.30. And if we should get more down action here, or just staying like this, that 18-day average could crisscross this 100, and you get a bearish setup on that. So not out of the woods by a stretch. Then we go to the palladium market, and all it's done is move to the right-hand side of the Bollinger Band. It had been under it, as you can see. It's moved over there. It's in a vertical price drop. That you can easily see. In terms of, do we have the pattern of bearishness? Well, we have certainly the big break, but you have a higher high, lower low, and that means it's been a rough one to catch. Just look at every single day back here was a lower low day. So the market didn't give traders much of a chance to get anything done. It all culminated in 3 days against the upper Bollinger Band, then it let go. In the dollar, caution. That's the word now. I want you to look at the reading here of the slow stochastic, 82.29. Starting to point down a lot. It is not underneath 80. It is still being bought by the pros, but a close under 79 would be the first sign here that this market wants to correct more, maybe get back, in fact, to the 95.54 level, that 95.50 zone for the 18-day average of closes. I say this because when you take a look at my financial wrap-up, the euro currency's already tonight losing its embedded reading. Now, losing it is not saying it's lost. It needs to finish the day like that. Then we can say more about it. You know, I teach this and so much more in my charting course, and you can get it free this week only. Instead of a one-day deal, this is Cyber Monday, I keep it going all week. But you get to choose if you take a one-year subscription, and they're not expensive to my video research, along with my written, your choice of what you'd want to do, to either my charting course or the enhanced Bollinger Band course. These subscriptions, by the way, they start at $156. This course I sell for $249.95 to give you an idea. So it's a one-time deal. You want it? Great. This is a great way to learn. It's a great gift for you to give to people, too. We'll start the course when you tell us to. If you have somebody that's a gift for, we'll take care of it with you for them as well. To view this, it's really simple, this offering. All you need to do is take your cursor, move it up right here. You're going to see an icon come, click on it, and everything will be right there. Just fill it out, and away you go. It'll be in the system just like that. In the meantime, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.